The current account balance, compiled by the Commerce Department's Bureau of Economic Analysis as a quarterly report called U.S. International Transactions. The current account balance measures the difference between the dollar value of exports from and imports to the U.S. Categories tracked include goods, services, investment income, and unilateral transfers. The Detroit Purchasing Managers Index, compiled by Commercial Bank for the Detroit arm of the National Association of Purchasing Management, which is known for its Purchasing Managers Index. This monthly index measures manufacturing activity in the Detroit area. Like the PMI, it's on a scale of 0 to 100, so that readings over 50 signify growth, and those under 50 indicate slowing. In addition to the main index, there are separate readings on the automotive and non-automotive sectors, and on 6 categories of activity: production, new orders, inventories, employment, vendor performance, and prices. Durable goods orders. This measurement of new orders, shipments, and unfilled orders for durable goods is based on a monthly survey of about 5,000 manufacturers, and on a month-to-month basis, it is extremely volatile. During the 80s, a core rate of change that factored out expensive defense equipment was also noted. Now a core that excludes expensive transportation equipment is more important. Both come from the Census Bureau. The Employment Cost Index. The Labor Department's quarterly measurement of labor cost growth is a key inflation indicator. Employment Report. This monthly report from the Labor Department, perhaps the most closely watched economic indicator, has 4 major components: non-farm payroll employment, the number of new non-agricultural jobs created; the unemployment rate; average hourly earnings per worker; and the length of the average work week. The payroll number combined with the earnings figure and the work week measure help economists calculate how much workers produce in a given month and how much money they earned doing it. These are crucial determinations in the calculations of gross domestic product and personal income. The unemployment rate is more important to politicians than to the financial markets, which will have seen it coming. But the markets pay attention to it because if it starts climbing, politicians can be expected to clamor for the Fed to cut interest rates. Existing home sales. Measured monthly by the National Association of Retailers, the seasonally adjusted annual pace of existing home sales is influenced by interest rates, job and income growth, consumer confidence, and stock market gains. Factory orders. This monthly indicator follows durable goods by about a week, revising and supplementing those numbers with information on new orders, shipments, and unfilled orders for non-durable goods, things like clothing and food, as opposed to cars and appliances, which are durables. It also adds data on factory inventories of both durables and non-durables. Federal budget. The Treasury Department's Financial Management Service calculates the difference between federal government receipts and outlays for each month. The month-to-month change reflects tax payment deadlines. In April, the government generally runs a surplus, even if it's going to run a deficit for the year. For some reason, surpluses, rather than deficits, are marked with a negative sign, maybe because deficits are more common. The Geometric Mean Consumer Price Index. This relative of the Consumer Price Index was devised by the Labor Department in April 1997 to see whether it yields a truer reading of inflation than the CPI is thought to. The main difference is this. Because the CPI is calculated using something called a fixed weight, less payers formula, it doesn't account for the fact that as prices change, consumer spending patterns change. As a result, it is thought to overstate inflation. The geometric mean formula, by contrast, should reflect that behavior. On April 16, 1998, the Labor Department announced that beginning with the January 1999 report, it will incorporate geometric mean calculations into the CPI in a way that should trim it by 0.2% per year. Geometric mean calculations will be used in index categories that account for about 61% of consumer spending. The existing formula will be retained for the rest. A department release explains the change in greater detail. The geometric mean CPI is released monthly, a week after the standard CPI. Gross domestic product. The quarterly economic growth rate, calculated by the Commerce Department's Bureau of Economic Analysis, appears in three forms: advance, preliminary, and final. Its price index measures the change in prices paid by U.S. residents from quarter to quarter. The implicit price deflator does the same thing, but it's a derived measure that can be influenced by changes in the types of goods and services being purchased. The Help Wanted Index. Compiled monthly by the Conference Board, this index is based on help wanted advertising volume in 51 newspapers across the country. The group says that with minor exceptions, rising ad volume has corresponded to improving labor market conditions, and fewer ad pages to hiring slowdowns. Housing Market Index. A monthly measure from the National Association of Home Builders. Based on reports from about 400 builders, it rates demand for single-family homes, seasonally adjusted, on a scale from 0 to 100. Housing starts. The Census Bureau clocks the seasonally adjusted annual pace of construction of private single-family and multifamily homes each month. Job and income growth, consumer confidence, and interest rates all influence housing starts, which in turn create demand for durable goods like furniture and appliances. Census also tracks the seasonally adjusted annual pace of building permit issuance. The number of permits predicts the number of housing starts for the following month, except that since permits aren't required everywhere, starts generally exceed permits by about 10%. Import and export prices. The Labor Department calculates the import price index and the export price index each month, breaking imports down into petroleum and non-petroleum components, and separating exports into agricultural and non-agricultural. It also calculates separate indices for imports from Japan, the Asian NICs, newly industrialized countries, Canada, and the European Union. Separate indices for services, as opposed to goods prices, track price changes in airfares and air freight charges. Industrial production and capacity utilization. Industrial production, an index set at 100 in 1992, measures the change in the volume, as opposed to the dollar value, which can be distorted by inflation and price changes, of output of factories, mines, and utilities. Capacity utilization, a percentage figure, gauges how much of their capacity those enterprises are using. For both measures, increases reflect quickening economic activity. The Fed compiles them monthly. Initial jobless claims. The Labor Department's weekly, seasonally adjusted tally of the number of people who file for state unemployment insurance benefits for the first time gives a sense of what the all-important monthly employment report might look like. Economists pay more attention to the 4-week moving average, which smooths out big changes sometimes produced by bad weather and holiday-shortened weekends. Released Thursdays at 8:30 a.m. Eastern Standard Time. International trade. The Commerce Department measures the difference in value between exports from and imports to the U.S., including both goods and services, on a monthly basis. The ISI Index. Compiled weekly by International Strategy and Investment Group, a research firm, this index measures current economic strength on a scale of 0 to 100. The firm consults with about 100 companies in 5 industries that tend to do well when the economy is growing and poorly when it's not: retailers, auto dealers, manufacturing companies, home builders, and bank lenders. A 4-week average is also calculated, released Mondays at 11 a.m. Eastern Standard Time.